That's just some education stuff I did earlier. I haven't taken it off. But this is the weekly chart, and you can see we've been in a downtrend for quite a long time, and it's got very volatile recently. I mean, up until sort of March, April, it was a fairly steady decline, nothing too volatile, and then in the last month or so, it's got very volatile indeed. It started around the middle of April with the big sell-off. Then we had a nice bounce back up, but you can see that big red trend line there. Worked really nicely as resistance. Actually, that's the daily chart. This is the weekly chart, which is just a bit clearer without all that stuff that I put on there. So yeah, even on the weekly chart, it still looks very, very volatile. And we bounced up 4 weeks in a row, was held by this trend line. So that was giving you a clue that we really weren't going to break any higher. This black line here is a 200-week moving average. We were just about holding above it, and then this week we opened below it, and that was the trigger for a big sell-off again into this week. And we've just headed down in pretty much in a straight line. I'll go back to the daily chart. If you ignore all the notes I've made on there, still looks bearish. Yesterday we had a level around 14.05. If you were tuned in yesterday, I'll just put a line there showing you why. It was just a few highs and lows which were fairly obvious, so we picked that 14.05, 14.02 level as we were speaking. In fact, that broke yesterday, and of course we've just continued lower, 13.69 the low today, but there's really no reason to get bullish or be looking for a particular bounce in this market now. Gold, if you have a look at the shorter term chart, this is a 4-hour chart. We are getting a bit oversold, but that in itself is not enough, I don't think, to start getting bullish on gold. If I just open up this 4-hour chart, yeah, you can see we broke the 61.8 short-term Fibonacci support. We'd hovered above there for maybe a day or two, in fact, if you can see on the chart. So you know, people were taking note of that level. After we broke 14.05, we'd hovered just above there. Yesterday we broke it as we were doing our webinar. We continued lower. The next target was 13.85 according to the short-term Fibonacci's, and we hovered above there for a little while, got to 13.87, tried a bounce, but the bounce really couldn't get very far at all, didn't even get back up to 14.05. And then of course today we've plunged again. So it seems to be a pattern really of gold, taking a dive, sideways, maybe a small bounce, taking a dive, as you can see, sideways, dive, sideways, dive. So anyway, we've just had a dive. We might go sideways for a few hours more. The only thing to be wary of is that on the 4-hour chart we're getting very oversold on the stochastics, and I find that the stochastics do work quite well on the 4-hour chart, so they are worth paying attention to. I wouldn't necessarily use them as a sole reason to base a trade on, but you've got to be aware that we could have a bit of an upturn at some stage that might last a day or so, just based on that. But when you look longer term, daily and weekly chart, they do look pretty horrible. And really longer term, possibly into next week, would be surprised to see gold retest that 1322 area. 1340, 1322 was the low that we saw. Where was that? Middle of April. I can't see anything that's telling me that. Well, it looks like there is a good chance of that anyway. Going forward, looking at a bit longer term on the weekly chart, if I scrunch this up, going back right to the start of the rally, in fact, which is 1999, I think, if I remember correctly. It'll load in a minute. There you go. Should have some Fibonacci's on here in a minute. Maybe not. Okay, I'll put them on. Okay, so that's the whole rally right from 1999, which was around the 250 level. And this shows you that 1527 was the first big support level, and you can see that held really nicely. If I open the chart up again, that held really nice for months and months, 6 months really. 1535 was a low there, 1522, 1527, all around that 1527 area, really held nicely. And the market was fairly calm, chopped about a bit, but nothing too serious. But then as soon as we broke that 1527 level, and I'll open it up even wider just to make that clear, you know, the losses accelerate, and we've now become very volatile having broke that. I personally wouldn't be surprised to see it continue lower. As I said, 1340, 1322 could be seen. I don't see any indication of a bottom at the moment, on the weekly chart at least, and if we keep going, the next big target, Fibonacci-wise at least, is 1283, 1284, 1283, which seems a possibility. We've got a low here of 1308, so a break below there will keep us on track for that 1284, 1283 area, and you can see just here we've got 1265 as a high, so that would be the next area to place a stop. If we were getting long around that 1285 area, $20 stop seems quite reasonable when you bear in mind the sort of moves we're getting. I don't think that's a particularly big stop. How do you think go below 1322? Well, yeah, as I say, below 1322 is a possibility, really. I mean, we had a huge bounce off there, but that doesn't mean that's going to hold forever. If we get down there, I would imagine we would hover about a bit. I mean, especially with being so oversold on the 4-hour chart. Whether we get there over the next week or two, I don't know. It might take longer. But look for a break below 1308 then, which is this low that we've got. Actually, that's a 2011 low, I think, if I'm not wrong. Looks like the low for 2011. So 1322 down to 1308 is fairly good support, especially being a yearly low. That's going to be quite important. But below there, then we've got a good, whatever that is, $20 or so further to go, down to 1284 area, $22 or whatever that is. And that should be really good support, but we'll have to have a look at the charts again around there, and we see if we start to build any patterns or see what happens weekly chart-wise. We should be quite oversold. You can see we got oversold when we had that big bounce off 1322 the last time. Longer term, not particularly bullish, especially as we failed at this trend line here. We didn't really get anywhere near 1503, which you'd have thought we might have a go at, and we didn't, which just shows how weak the market really is, in my opinion at least. Okay, so that's gold, unless anyone's got any further questions about gold. I'll just give you some levels on the upside if we do manage to have a rally. You can see quite clearly that 1405 worked quite well. 1403 is the high of this bar here, and this low here, when we saw some profit taking, was 1405. So 1402, 1405, if we get up there, should be quite good resistance. You can see that quite clearly. I'll just try and highlight that line there. And then these Fibonacci's are working quite well. So if we manage to get above the 1408 area, say, we could crawl higher to 1424. But that certainly worked quite well on the way down on this last little sell-off in the last week. 1419 we got as far as before we bounced, but then on the second one, 1421, so I suppose 1424, 1420 area would be the resistance you'd be looking for if we managed to hold above 1405. Just some short-term levels there. But judging by the daily and weekly chart, I'd suggest that perhaps selling into any bounces is the safest strategy rather than trying to pick bottoms in this market. That looks too risky. If you know, you'll know if you were following me yesterday, I thought perhaps 1405 might see a bounce yesterday, bearing in mind how oversold we were in the short term on this 4-hour chart. But that didn't work at all. So support levels are not holding for a long period of time, as you can see from this 4-hour chart. You know, it's a break lower, head sideways, and then break lower again. That seems to be the pattern at the moment. Not worth fighting that trend, I don't think. We'll have a look at crude oil, which has been very volatile. WTI crude oil on the weekly chart again. This goes back to 2010. So you can see the range has been narrowing really. It's basically a sideways trend, but we've been quite volatile within that sideways trend. On the weekly chart it looks like we're becoming less volatile, but when I show you the daily chart you'll realise it's not really the case. If I open it up, we are stuck in this sideways channel, which we have been for about 6 months. trading quite nicely within that channel, but getting very volatile within the channel. So it only took 3 weeks for us to fall, I think, $12 that move. What was the high then? Nearly 98 down to just below 86. So yeah, just over a $12 move we saw in just 3 weeks, which, you know, that's pretty big, bigger than 12% move. And then the following 3 weeks we just rocketed straight up and nearly recovered the whole amount. So you can certainly say that crude oil has been very volatile in the last 3 weeks. I mean, even with this channel, you wouldn't really have expected it to test the high within 3 weeks and the low within the next 3 weeks of that channel, or I certainly wouldn't have done. You'd have thought it would chopped around a little bit, but having some big moves. So what next? Well, we retested the trend line, the upper trend line. That's been hit 4 times now, so that's getting very reinforced, this trend line. You can see we've had a blip through it, but certainly not closed above it on a weekly basis. We've managed to hold. We've got quite a few moving averages just around. Where are we now? Around the 100-week moving average, which is around 93.5, which I think has been the low of today. In fact, we'll check that in a minute. The 93.5, we've got some good weekly moving averages, the 9-week and the 100-week coming in around 93.5. So, as I say, I think that's acted as support today. Again, sorry about all the text on here. That's just some education stuff I was doing. Just open it up, try and get rid of some of that. So this is the daily oil chart. You can see we got very overbought right at the top of the channel. We had a go, pulled back, had a second go, failed, and that was the trigger for some sharper selling. Very volatile. You can see that day alone we had a range of $3. Anyway, we've continued lower again yesterday, another volatile day, just over $2 range. We touched the 200-day moving average, which is always worth keeping an eye on. The 100-day moving average is also always worth keeping an eye on, I feel, and you can see it held nicely on the 10th. Oh, sorry, on the, what was that? The 10th of May? Yeah, 10th of May. That was Friday, I think. But then, yes, but we're stabbing below it, but not holding below it at the moment. So as I say, 93.5 area has been support today. So what next for oil? Well, I think we'll continue lower. We're starting to develop a downtrend, 1, 2, 3, 4, 5, 6 days of losses so far. So the daily trend is certainly starting to prove to be on a downtrend. But 92, around 92 there below, where we've got the 200-day moving average, is looking quite good, and that's also yesterday's low. So that will be the level to break. Watch that level. And then we'll be going in towards the middle of the range, 91.5 area. 91.40 is a big 50% fib retracement of that $12 or so rally that we saw from the end of April through to the through to the beginning of May. So yeah, some levels to watch there. I'd say 92.75 is a level to watch. Then you've got the 200-day moving average at 92.17 today. Then below here, 91.39. I'm guessing we're starting to look quite oversold on the. Oh, we're not actually. 4-hour chart. We're actually recovering. We got very oversold yesterday, which may be one reason why we triggered that big bounce off the 200-day moving average. It was almost exactly at the 200-day moving average, in fact. So we got quite a big bounce off there. Not unsurprising. 200-day moving average does tend to have that effect on occasions. So yeah. Short term, we're recovering, not a massive recovery, but certainly given the 4-hour stochastic enough chance to unwind quite a bit. We failed at a really good resistance level, 94.50 area. You can see that from the Fibonacci's. I'll just expand it so you can see why I've put those on there. We had a low of 95.61 on the last dip, that $12 dip that I mentioned earlier. We then had a $12 rally, which I mentioned earlier. So I've used that as some good Fibonacci levels. On the way, we took a little tumble down to 90.11, so I put a second set of Fibonacci levels on there. And I quite like it when they overlap like this. It gives me more conviction in the levels. And you do tend to find those bigger levels that overlap tend to hold a bit better. That certainly worked yesterday afternoon when we bounced off the 200-day moving average and we rallied up to 94.44, the 94.47 area. That Fibonacci level worked really well. In fact, the exact high of that move was 94.44, so it worked perfectly. You can see it worked quite well on the way down as well. We've trickled off, maybe a bit more sideways. Oh, well, we're having another pop at the upside again now, so we've got to watch 94.44, 47 area. Again, we might retest it, looking at those 4-hour stochastics. Maybe we'll fail there. If we start pushing through 95.00 though, we could head up to that next Fibonacci level of 95.50. I'm guessing would look quite overbought at that stage in the short term on this 4-hour chart. And you've got quite a few little highs up here of 95.60, 95.70. So if we get through 95.00, I'd then be looking for 95.50, 95.70 area. Possibly as another selling opportunity, because bearing in mind the daily chart still looking quite negative. So a bit like gold, selling into any strength, I think, is probably safer than trying to pick bottoms in crude oil at the moment for that reason. Hopefully you can see that 100-day moving average at 93.68 seems to be sort of pivotal, if you like. It's certainly held, well, not really held the downside today, actually. That's not true, because we got down to 93.23. So that's crude oil. Longer term looking a bit more negative. 91.39 is the middle of the range, so eventually I'm guessing we might see that over the next few days. A break below there. We've got good support around the 90.00 area. You can see that was a low on the 1st of May, around 90.11. So that would be our next target probably. We could bounce from there. We'll just have to review it when we get there. We might be looking a little bit oversold. So I don't want to project any further than that. But if we did get to this lower end trend line, which is around 86.00, with the previous low in April of 85.61, so sort of 86.00, 85.61 area should act as good support, and we'll get an idea if that range is going to hold if we start bouncing off there. So yeah, trade the range is generally the plan for oil at the moment until we see a breakout. So that's WTI crude. If you want me to have a look at anything else, please let me know, but in the meantime I'll have a look at Brent. Brent's a slightly different picture. Still a bit of a range, but doesn't look quite... Sorry, I've got a question here. Would you take two trades on the two correlated pairs at the same time? Yeah, I was asked that question yesterday. Correlation seems to be going out the window. I don't look at markets and compare them. I mean, I looked at the WTI spread against Brent, and it didn't seem to me to be much of a spread, to be honest. They seem to move quite independently of each other, and you can see that just on the charts I'm showing you now. You know, the patterns are not really the same. People do look to use one market against the other quite regularly, and I do get asked that question quite a lot. I don't look for those sort of trades. That's just a personal preference. I don't see a huge correlation. I know that gold is supposed to move in line with the dollar, oil is supposed to move in line with the dollar. I think the theory goes that as the dollar increases in value, oil and gold decrease in value because they're more expensive in dollar terms. I don't follow that correlation closely enough, so I wouldn't really be expert enough to comment on it, to be honest. Going back to Brent crude, more of an uptrend in recent, well, certainly in the last 3 or 4 years, more of an uptrend, and we're really hovering around that trend line at the moment, hovering around the 4-year trend line at the moment on the weekly chart. So not quite so stuck in a range as WTI is, but looking a bit more positive. You know, we are testing this big trend line. Let me just widen that trend line so it's a bit clearer. There you go. So that's the big trend line. You can see why I put that trend line. It's just very obvious, joining up some lows there, and we're hovering around it. We've really tested it around the end of April, beginning of May, but managed to hold above it. We only closed below it on 1 week, but the next week quickly regained it and closed above, and we've been closing above it every week since. 1, 2, 3. This is the 4th week that we may close above it. The trend line is at 102.00 area. So as long as we hold above there on Brent crude this week, the outlook's still relatively positive. You can see that the weekly stochastics are just turning positive now. They've turned higher, pointing higher. So that gives us some confidence as well that we may start to build on that. Let's have a look at the daily chart. So daily chart, no real bottoming patterns on that trend line. We just scrunch it up a bit so you can see the trend line more clearly. Okay, that's a shorter term trend line. That just goes back to the middle of June 2010, but that has worked quite well. Just widen that one a bit as well. Okay, so that goes back to May or June 2010, just joining up the lows. So very obvious trend line, big one, but it is working. If I stretch it out again, the daily chart, you can see we almost touched it, almost exactly the trend line there on the 22nd of, what am I looking at here? 22nd of June. Yes, sorry, 18th of April. 22nd of June was when it started. 18th of April, the trend line was 96.45 and the low was 96.75, so we got very, very close and had a really nice bounce off it. And from the daily chart, you can see we've started to try to build into some sort of uptrend. Some trend lines on here. This is actually working quite well. Not the steepest uptrend I've ever seen, but it is nevertheless an uptrend, you know, higher highs, higher lows. This trend line is working. The trend line yesterday came in at 100.99. Yesterday's low was, sorry, that's not right. The trend line came in yesterday at, yeah, it is right, 199, yeah. And the low is 101.20. So we managed to just hold about 20 cents above that trend line. Daily says we're getting a bit overbought, so we've got to be quite careful. Maybe you know, it's been a relatively weak recovery off a long-term trend line, which has allowed the daily stochastics to recover from that very oversold position. We recovered, let me see now. I've put 2 sets of Fibonacci's on here from the previous highs. The first one from 119.17, which was, if I scrunch that up, you can see we had a big drop off from there, so that's an obvious Fibonacci retracement to use. 105.31 was the 50%. We barely managed to close above there. We did on one day, but the next day we quickly pulled back below there, so we haven't, you know, that 50% level is holding, and there's a slightly shorter term level, if I extend that a bit, from the last peak up at 111.79. So that last drop we managed to almost perfectly retrace 61.8%. That's 106.04. We got to 105.94, so within 10 cents of that, and we quickly rejected it and have come back down. So yes, we're holding the uptrend, but starting to look a little bit worried on the daily chart. Maybe we can get back up to test sort of 105.5, 106 if we're lucky, but probably not a lot further really. This red line is a 9-day moving average, and that's actually working quite well as support and resistance. You can see there's lots of highs and lows that have held the 9-day moving average on that. Seems to be holding today, in fact. So we'll look at the short-term chart. Starting to get overbought, but not overbought yet. So let's stick with the idea that we're building a little bit of an uptrend. Stick with the trend line. Same trend line here on the 4-hour chart. Stick with the view that we could keep crawling higher, and stick with the trend, which is it's a good 3-week trend actually. So stick with the uptrend on Brent is probably the safest strategy at the moment. Look for potentially a retest of that 105.5, 106 area. Don't know whether we'll get that far. We may not, but at least give it a chance to try that, I think, in Brent. But if we fail there in that 105.5, 106 area, then we've got the makings of a double top. It's not really a double top because it's not the end of a huge uptrend, but nevertheless, failure here at around 105.5, 106 would be a little bit negative, and you'd then potentially be looking for a break of this shorter term 3-week trend line, and maybe then another test of this big trend line down at 97.25, 97.00 area. Well, 97.25 down to 96.75 would be the big area to watch, because of course a break of 96.75, which is the low of the year so far, would then be a problem for bulls anyway. So I think that's about it for Brent. As I say, possibly a little bit higher. Watch 105.5, 106. Failure there would then risk another test of the shorter term 3-year trend line with a possible break lower to test the 4-year trend line, I think, isn't it? 3-year trend line, 3.5-year trend line. Okay, that's probably enough said on Brent. Staying on commodities, I'm going to have a look at nat gas because this has got quite interesting. Natural gas, weekly chart, had a good run up for about a year now. I won't bother going back any further than a year. Okay, so a nice steady uptrend in natural gas, higher highs, higher lows. Then we got to 44.44, and this weekly candle here is a big key reversal, a new high, broke the previous high just, and then closed a lot lower, taking up at least 3 weeks of gains, almost 4. We closed below the close of the for 4 weeks earlier. So yeah, took out a big chunk of gains there, and that was a big sell signal. So we continued lower. I was actually looking for it to come as low as 38.44 because that was the first big fib support level. We didn't quite make it. We just hovered above there. Last week the low was 38.83. This week the low is 38.86. So a short-term double bottom there. Looks like that's it. We're not going to quite make it to 38.44. I'd suggest we're probably going to rally back up. We're being held this week by the 9-week moving average, which is at 40.96. I've got a feeling we can get above there next week, or maybe even this week. Actually, no, probably next week, and I'll show you why in a minute. But that 9-week moving average is working quite well this week anyway, so we'll have to see where we close tomorrow night. But looking at the daily chart, you can see we got really oversold, which is possibly why we didn't quite extend down as far as that 38.44 level. We just hovered fractionally above it, only got to 38.86. Close enough maybe, not close enough for me to buy it. In fact, I was being too patient, waited too long, didn't buy it. And so now it looks more positive. We've pushed higher. We haven't made it as far. You can see some Fibonacci's that I put on here. That last leg of the rally, I've used that as a Fibonacci. I'm just going to take. Actually, no, I'll leave them on. But you can see we've had a good bounce, and we're now unwinding that oversold slow stochastic on the daily chart. I thought we could get as far as 41.30 actually. I thought we'd get a really good bounce, but appears not today. The blue line is a 21-day moving average. I use 9, 21, 55 as my periods for moving averages. I think they generally work quite well. So I thought we'd test that today. We failed. I'll show you why on the 4-hour chart, possibly why we failed. We got very, very overbought on the 4-hour chart. So slow stochastics I think do work quite well on the 4-hour chart, and they work well here. Actually, I'll put a much shorter term Fibonacci there. Yeah. Okay, this is a bit clearer. The high for that whole rally that you saw on the weekly chart was 44.44. Then we came down to 38.83. So obviously the short-term Fibonacci's, we would use that high and low. And as I say, I do like Fibonacci's. They do work quite well. They work really well here on the 4-hour chart. We managed to get as high as 38.2, which is always a level you've got to watch almost exactly actually. 40.97 was the level. We got to 40.95, so we got to within two pips of that price, and that's held it. We got very overbought on the 4-hour chart, so there's good reason why we did halt exactly there. We're starting to drift lower. I'm guessing from the 4-hour chart we'll go lower for a day or two. We'll probably see 40.15. That may be as low as we get, because if you remember, the daily chart looks much more positive, so I'm not expecting a big sell-off. 40.15 might end up being a good support, and it might end up bouncing off there. You can see we had a few highs. Where are we now? 9th of May, 40.20 was the high. The following day, 40.10 was the high, and we struggled here again on the 14th until finally breaking late in the day. So you can see that 40.20, 40.10 has worked as quite good resistance on the way up, therefore it should work quite well as support on the way down. So watch that level on this little sell-off. It's a short-term profit take, I think, just to let this 4-hour stochastic unwind. By the end of tomorrow, we'll probably be starting to look oversold on that. If we get below 40.10, then somewhere, so I really don't want to guess. I mean, we've got levels around 39.30 here. Maybe that's as low as we'll go. I've got a feeling we're not going to retest that 38.83 level just because the daily picture looks so bullish. But if we did get as low as here, I would be looking for a double bottom. Yeah, we've got 39.30, 39.40, 39.30 areas. The next support, actually, I would say below 40.20, 40.10. So possibly we'd hold there and then look to take off from there. We shall see. So nat gas shorter term into the end of the week, probably some profit taking. Into next week, maybe another push higher. Watch that 41, 30, 40 area, which is a fib level, coincides with the 21-day moving average. A push above there would give us another leg higher, really. There's a little gap here. See this gap? The high of the 26th of April was 41.96. So that would be the first target on a break through that 41.30, 41.40 area. We'd be looking at 41.96, and then markets do like to fill gaps. So we'd be looking for 42.25. That's the low on the 29th of April. Would like to see that gap filled. And then you can see 42.25, 42.50. That would be our next major resistance level. That was where we'd be looking for, well, I say major, a resistance on the daily chart at least. We'd get that far, and then we'd have to start seeing if we look overbought again in the short term. Would that make a head and shoulders pattern? Not really sure. Possibly. Let's have a look. This would be the neckline if that is a head and shoulders. Yeah, that could be a head and shoulders. If I open this up a little bit, it's only a very small left shoulder, but you can see here this is a bit of a left shoulder, and then we dipped again, took off. That would be a head with a double top in it, in fact, because we had a high at 44.29 and then a high at 44.44. So that, in my books, counts as a double top. So a double top within the head of that head and shoulders. We've come back to meet 38.61 was that low, 38.60 area. We got to 38.86. So the the bottom of that right shoulder is slightly above the left shoulder. That's not uncommon. So that means this 41.30 area is of even more importance, really, because it matches the high of the left shoulder. So that just reinforces that level that we were talking about earlier, 41.30 area. If we hold there, we've got the makings of a nice little head and shoulders top. What does that mean? It means a revisit to the neckline, which is at 38.90 area, and a break below there. We'd look for a measured target. How do we measure the target? We take the head, the top of the peak, which is 44.44. Take the low of the right shoulder, 38.83. My maths is no good, but if you've got a calculator, you can deduct 38.83 from 44.44, and that will give you a target. I tend to find they tie in quite nicely with Fibonacci levels and I'm guessing roughly just by eyeballing that. Okay. Yeah, 36.29 would be the first target, but we could get as low as 34.07. If you've got a calculator, I think you'd find we would come out somewhere close to 34.07. Let's just have a look. 34.73 actually is, I'm going to do 34.73 is a big support level below that, so this is all tying in quite nicely. In fact, if that is a head and shoulders pattern, let me just recap. If that does turn out to be a head and shoulders pattern with a failure at 41.30 area, we then look to test the neckline. It's not confirmed head and shoulders until we break that neckline, but a rough, I'm not going to bother to do the maths, but I'm guessing that once we break that, that would confirm the head and shoulders. The 200-day moving average comes in around there as well at 200-week moving average comes in around there as well at 38.07. So once we break that, that would be a very significant event, and your next target in the weeks to come would probably be this trend line around 3500, 34.73 is the big level. So that would be the sort of area we'd be looking for. 3500, 34.73, I think would be a realistic measured target if we break, if that is a head and shoulders, and if we do break lower. So nat gas is quite interesting really. It's definitely one to watch. Let's watch for those patterns. Sorry, I waffled on a bit about nat gas there. I'll probably cover just about everything in fact, but if you've got any questions on nat gas, please let me know. We've got time just for one more market, have we? 10 minutes or so? Just think what's worth looking at commodity-wise. Could do some metals, but no, I don't think we will. Tell you what, let's have a look at the euro versus the dollar, because someone asked me about the dollar earlier. Do this as the last one. Okay, so euro has been in let's just take it from the high of 2011. You can see that we've been in a downtrend. We managed a correction. If we throw some fibs on here of that big move down from 2011 through to 2012, you'll see we failed just below. Well, we didn't quite make it to 138.33, which would have been the target. We only got to 137.11 and then failed massively with a big red candle there. Okay, so I'll take those off. They're not relevant now. So we've had a bit of a recovery. On the grand scale of things, we might have had a 6-month rally, but on the grand scale of things, that's just a recovery in a bear market, really. You've got to bear that in mind. That's why you've always got to look longer term, really, to see where we truly are. So things are quite negative for euro, US dollar in the longer term, but right now, as from today, we are still holding that 6-month uptrend. We've had a good go at it this week, and we'll have a look at that again. We dipped below it. We gave it a really good test, but fortunately we've managed to hold on. And if you read my reports, you'll know that I was hoping we would hold on. I got really lucky actually, because I suggested stops below 128.40, and we just managed to hold on there with 128.43 as a low. So that was a bit of luck for me this week. I think you call that a tweezer's bottom. I'm not really sure, but we've managed to bounce off that trend line anyway. So that's a relief. That not only is it a trend line, it was also a fairly decent longer term fib level, 128.77. So, okay, we overran it by 30 pips or so. Not a big deal on the grand scale of things, and we've recovered nicely off there, which is a relief for me at least. Daily chart, we're just getting a bit oversold, so that did sort of help to convince that we would hold that trend line, and we're now seeing a little bounce, good bounce today in fact. It's just starting to develop now, this bounce, as we speak in fact. So little double bottom there, recovery. I think this recovery can run on for a couple of days longer. 4-hour chart now we're looking at. Got very oversold on the 4-hour chart, which was another good reason to hope for a bounce. And fortunately we are. First target for the bounce is going to be 129.38. We're heading up towards there now. We're not far from it, which is a relief, which I keep saying. You can see what the short-term Fibonacci's are obvious. I'm just going to scrunch it up so you can see I've just taken it as the last little run down, which is basically throughout this month. We got a high on the first of the month of 132.43, got down to 128.43, and now we're bouncing. So the obvious short-term Fibonacci targets, 129.38, that ties in nicely with this low here. You can see that 129.36, 129.42 acted as a bit of support around last Friday and Monday. We bounced off it, in fact, quite nicely. So that's obviously going to act as resistance on the way up. It's going to be a target. I would consider that a target, but also resistance. But you know, longer term, we've just bounced off quite a good 6-month trend line. So there's every chance that, although we'll probably stall here, maybe we'll push through it. When, I don't know. Maybe tomorrow we could push through that and go on for the next Fibonacci target, which would be 129.96. Again, you can see a bit of activity there. So that would be a good target. It's a bit. I'm not quite sure what happens from then on, really. I would like to see 129.90, 130.00 area, but I'm wondering if we get any higher. The reason for that is we've got 200-day moving average up there at 130.00. In fact, we've got 200-day, 9-day, and 55-day moving average almost all exactly at 130.00. So you've got a lot of moving average resistance there. You've got a big longer-term Fibonacci resistance level there at 129.95. We've got anything on the weekly chart there? Yeah, we've got the 9-week moving average at 130.00. There's all sorts going on around 130.00. The daily stochastics are not particularly bullish. Okay, they're oversold, but they're not saying anything particularly bullish. So whilst I can hope for a recovery back to 130.00, I'm not really expecting anything better than that. I think we you know, the risk is that we retest this 6-month trend line and break below it, really. I think eventually we'll break below it. I can't really give you a timing on it, but those are probably the levels to watch on that one. Probably enough said on that for the time being. Dollar Swiss, some action happening right now. Okay, let's have a look at that. Just got time, I think. US dollar. Dollar's managing a bit of recovery. Okay, dollar Swiss. Okay, not looked at this probably ever, in fact, so let me just try and get some sort of bearings on it. This is the weekly chart. I always start with a weekly chart. Wow, okay. Big downtrend, but we've had a good recovery. Last year we pretty much just went sideways, so we tried to break above the 200-week moving average, which isn't something we've done for quite a long time. Excuse me. Haven't managed to break above it, or at least hold above it this week. We did have a good stab at it. Daily chart. Let me just throw some fibs on here. Actually, just try and give you some sort of bearing. Let's try that one. Doesn't really say a lot, does it? No, not massively. Okay. Daily chart, yeah, we're getting overbought. I'm slightly puzzled because that 200-week moving average, we really did have a good go at it. Okay, we're back below it now. Can't really see any other resistance. What do I make of that? Okay, daily chart getting overbought, and look at that candle yesterday. That was the piercing through the 200-week moving average, but it wasn't sustained at all. Big spike up, lower close. So that really is kind of telling me there's a risk that this little recovery is coming to an end. Bit dangerous maybe to run longs any longer. And look at today, again another spike higher. Tried it on the upside, failed again. Now coming down even lower. Not looking too good really in the short term, this one, I think, on that basis. I'm particularly troubled at that 200-week moving average. Quite impressed that we managed to get through it. But anyway, these two candles today are not bullish at all. The spike up, the lower close. whatever that's called, hammer or something along those lines, is it? Shooting star. So two shooting stars, end of a trend, yeah, not particularly bullish. You couple that with the 200-week moving average, which is going to act as a lot of resistance this week, plus we're overbought on the daily chart. Two shooting stars, don't like the look of that at all. 4-hour chart, well, the stochastics are negative, which isn't a massive surprise. Let's have a look. These are Bollinger Bands, these pink things. I tend to use them on the 4-hour chart because they generally work quite well. You can see they work quite well yesterday. They held that move. I don't use them on any other time scale because I don't think they work brilliantly. They're not particularly reliable on any other time scales, but 4-hour chart seems to work okay, so I just tend to keep an eye on them. Just put some fibs on here now to try and give us some sort of retracement targets. Okay, these look like they fit quite well. You can see 95.77 coincides quite nicely with a high for March. That looks like a high for March, if I'm not mistaken. High for March, 95.67. So 95.77, 95.67 looks like an obvious first sort of target for the downside move. And then below here, 94.71 would be the next fib target. We've got a little bit of support around the 95.00. So below 95.77, probably looking at 95.00 to 94.75 area, and that certainly looks possible. Wouldn't be surprised. Do you think that if the break just happened in 1 month, June candle, that could be market manipulation? I don't know. Market manipulation isn't something I know much about. In currencies, I think you get it a lot less than some of the futures markets, so I wouldn't say so. Markets like to have a big stab at levels, and they do overrun, but on a weekly closing basis or a daily closing basis, unless waiting for the close is often quite a good thing if you can do that. And tomorrow night will give us a really good understanding of this weekly chart. Bear in mind that 200-week moving average at 96.30. A close below here would have said to us that on a weekly basis we've attempted to break it and we failed. And I've got a feeling we will fail, especially as you can see from this daily chart, looking a bit more negative as we see it right now anyway. So watch that 96.30 area. We're trading around there right now, in fact. 95.77 is obviously the one below that. If we close below there tomorrow, then again that's going to start us off on a negative footing on Monday morning, and we'll probably be then looking at 95.00, 94.71. Break of the previous daily bar, yeah, exactly. Break of the low previous daily bar is significant. Yesterday's low was 96.43. You can see this spike higher was 96.28. So sort of 96.30, 96.40 area is another area to keep an eye on, and we're hovering around there now. But we've been down as low as 96.08 today, so doesn't look particularly positive to me, really. And on the grand scale of things, we are in a multi-year downtrend. Don't forget that. The big picture is most definitely negative for those longer-term weekly sort of positions. Stock parameters, slow stochastics. Is that what you mean? Have I tested using BTST? Your short bias too. Oh, good. Well, it's nice to agree, that's for sure. That's good. Tested BTST, sorry, you've lost me. BTST, I'm not sure what that is. If you can explain, I'll try and understand what that means. Other than that, I think we're pretty much close to... Oh, Bloomberg function. Let me try that. BTST. BTST. Don't know what that does. Hang on. USD CHF. Can't get that to work at the moment. Oh, back testing. Oh, yes. I'm aware of that. I haven't used it. I'm sure it's very, very good because the Bloomberg system is extremely good. I haven't back tested. I don't actually have an algo myself. I haven't developed an algo. I just sit and do this manually every day. I provide daily reports for independent traders and banks and all that kind of thing. None of it's computerized. It probably should be. Maybe I'm too old-fashioned, but I manually write them. And what you see me just do in the last hour or so is what I do every morning for about 30 markets, and I just try and make my mind up on how it's all going to work. And I've got quite a few subscribers that follow me, and they seem to like the way it works. They seem to like the levels. So that's the way I do it. But one day maybe I'll sit down and try and go what I do. I mean, what I do is relatively simple, as you can see. Stochastics, moving averages, Fibonacci's, trend patterns, trend lines. In fact, I've just spotted a trend line that we should have probably put on here. No, that really is not particularly relevant. I don't overdo it with trend lines. I mean, you can have trend lines galore on things, but try to keep it to a minimum, really. No, I can't really see anything particularly relevant trend line-wise here. What about daily chart? No, nothing really, I don't think. Okay, I think we are coming to the close, is that right? Nearly 5-2. Fibonacci fans. Yeah, I had a look at Fibonacci fans, and I've had a look at Fibonacci timelines. I probably didn't spend enough time with them. I don't know whether you use them and you find them useful. Maybe I need to spend more time on them. I do find Fibonacci extensions work quite well. Didn't use them a lot until recently with the S&P and the Dow Jones breaking new highs every day. You know, for me, the only way I can really figure out some sort of targets is Fibonacci extensions, and actually they've worked really well. Confusing why they would work, is it? Okay, yeah, no, I haven't used them. Maybe I should study them a bit and see if they do work, but I don't. Fibonacci extensions, though, they do seem to work, and I've been really using them, as I say, this last couple of weeks with S&P and Dow Jones breaking new highs. There's no other way to try and find targets or resistance, but they've worked really well. Yeah, I would certainly recommend keeping an eye on those when you've got markets breaking into new territory. In fact, Fibonacci extensions do work quite well even when you're not in new territory. I think Bloomberg does do automatically, yeah, there you go, look, that automatically does these extensions when you do Fibonacci lines, and I've noticed that when I've accidentally left them on, they've actually worked quite well. So that's something I should probably look at a bit more as well. Okay, if there's any more questions, let me know, please. Otherwise, I think we're probably done for today. I hope that's been of some help. Feel free to contact me with any questions at all, or anything I can do to help you. I'm just going to give you my website. I think the next webinar is 27th of this month. I'll have to check, but thanks very much indeed for following me today, and I hope I was of some help.